Welcome to part 2 of this video series on trading ideas, and in this section I want to highlight a few things about timelines. Specifically, when these trading ideas are listed, we'll have trading ideas of varying numbers every day depending on what the market is doing, depending on how aggressive the moves are in the market. And so all of these trading ideas are the result of a very sophisticated and complex algorithm that is searching through 30,000 stocks to produce some high probability trades. But with that said, it is a computer and it is spitting out trades based on all of those rigorous filters, yet you should always take a big picture view. And what I mean by that is you should always take a look at what the market is doing. So if the market is not moving much at all, for example, like it's not moving much at all today, then you should always think twice about being very aggressive. Some stocks will move more than others. We just saw in part 1 that TWC was not moving much at all, just like the market. And yet we could take advantage of that with a strategy such as a bull put spread trade. If we move on, let's take a look at the next one on the list. This one is MCK, and it's actually showing a bearish trigger. So let's go take a look at our chart, and we'll type in here MCK, and we'll see what it's doing for today. And what do we see? We see that it's down for the day. In fact, it had a nice big move down. It's starting to bounce back up, but the trend is obviously very clearly down. And this is something you should pay close attention to, that when the trend lines are pointing down, obviously we're bearish. When the trend lines are pointing up, we're bullish. And so often what we find is these trend lines act as support and resistance. For example, on this big uptrend, you can see the 5-day was acting as a nice support level. On the way down, it was acting mostly as resistance and then back as support again. Then we get into these periods of consolidation where there's not much happening at all. So if you're seeing a trigger occur during one of these consolidation periods, what it means is really be cautious. Don't be too aggressive with any of the trades you're looking to place in a virtual trading platform, or you're just looking to paper trade. Once you've got very comfortable with these positions, for example, let's say you were trying to take advantage of this position and you had succeeded, you'd gone into your virtual trading account, you'd found it made money for you based on whatever the trade you were looking at or whatever the strategy. It could be a bear call, a long put, a bear put, whatever it might be to take advantage of the downtrend. You can see you would have taken advantage of it intraday. You could be in, you could be out, and you could be moving on to the next trade. So you may have your own personal style. You may be a day trader. You might find that's a wonderful way to take advantage of these trading ideas. Or you may be a longer term trader and you say, you know what, I don't want to just go long and short intraday. Maybe what I want to do is take advantage of the credit spreads over longer time horizons, and that's absolutely fine too. You will have to choose based on your own personal preferences and your own decisions on portfolio allocations, which approach is more suitable to you. And all of those issues we cover specifically in our curriculum, and you're welcome to jump into live classes to ask us about what might be more appropriate to you. So with all that said, now that you've got some strategies chosen, you know which is to your personal preference, you go ahead, you practice a number of times, and ideally what happens is you actually make mistakes early on, and then you learn from those mistakes, and then you iterate, you improve, and you get to a point ultimately where you start to find out that you can take advantage of these trading ideas on a regular basis. And that's a great time to speak with a financial advisor who can guide you as to the appropriate path of dedicating and allocating real capital. And once you've done that, you can ideally take advantage of these in a consistent manner, knowing that when the ideas produce some nice winners for you, you're going to obviously make some nice money. And even if they don't, you can always adjust based on the expertise that we have here at MarketTamer. So we'll follow up in part 3 on exactly that point.